Hi friends, today we are going to discuss about the future trend, and it's a Friday, so normally I come in front of you and we discuss about what are the trend that we are seeing and what is the sense you can make of that trend to may help you create a wealth or help you understand about what decision you need to be taking. But before I begin with the future trend, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a higher amount of risk. Past performance is no indicator of a future returns, and you should be very cognizant of the fact that markets are volatile and they normally give non-linear returns. With this, let me start with the five trends I'm going to discuss about, and of course I'm going to take about one more, which is about result, and that I have not included that. If you look at in 2023, the real estate is one of the best performing sector. And I thought, let me look at what happened to the mortgage as a percentage of GDP trend. What is it happening? How do we compare vis-a-vis other parts of the world? And of course, I've compared with some of the Asian countries also, so comparison becomes more meaningful. How GST collection, and due to that, the impact of the indirect. So, Government of India get two kind of taxes, am I right? Receive direct and indirect. And what is the kind of proportionate increase that we have seen of indirect tax in total collection? At the same time, I also look at the direct tax. How number of income tax returns are moving up or moving down over the years. In last 1 month, the result season started somewhere maybe same time last month. And how in last 1 month, the IT companies have done extremely well. If you look at the Nifty IT index, it has done extremely well. And one of the reasons that they did well, attrition rate, so that we are looking at attrition rate. And the cement production, what is happening? Why I'm talking about cement production? Purely because of Sanghi was recently acquired by Adani Group. And what does this mean actually from the investment point of view? So let me start with the mortgage as a percentage of GDP globally. What happens? Now, if you look at India, which is it's only 11%. Mortgage is a percentage of GDP, as compared to China 18%, Thailand 20%, Malaysia 34%, and then others like Japan and so on and so forth. Now that gives a huge scope for housing finance companies to do extremely well. Now in some of the countries like USA and the UK, they do have loan against property, which has not really taken off as much as one would have loved actually. But the scope is huge. Now the question that comes to our mind is this if this is the trend which is low, should it not make sense to get into some of the housing finance company? Because why these numbers will keep increasing? I think one of the biggest problem, and this is my personal opinion, I believe, is that I think in India, the real estate is more of a state subject. It's not a central government subject. And red tapeism is extremely high. Due to that, when there is a red tape, there is a possibility of a corruption. And when there is a corruption, what happens? The builder will have to pay the price to get the project done quickly. And that increases the cost of overall construction. Now, one of the best way I personally believe is to reduce cost of property. See, today, I keep looking at some of the presentation which says that India's affordability indexes remain constant and so on and so forth. I personally believe that our affordability is still a little high. And I'm of the opinion that, one of the best way to increase the penetration of real estate in the country, or the house mortgage as a percent of GDP to increase, is to decrease the price of the property. And one of the best way to decrease the price of the property is to reduce the trade tape reserve, so that more the approval, more cost it get added. If we can make it more of an approval automatic kind of stuff, I distinctly recollect one of the leading builder from Bombay on CNBC TV channel suggested, not predicted, he basically made a statement, if our approval process are made automatic, we can reduce our price by 1/3. Now that one can get an idea about what are we talking about. So I think it's a clear-cut case that it basically merits, that we need to, and one of the biggest cost, if you look at, is a land, and then there's a labor cost, basically. These are the two major components. The land is always the bigger cost, depending on which part of the country you are from, and the labor cost is another significant factor. Somewhere, if you can reduce the red tapeism, I think there is a huge scope, number one. Number two, the real estate sector also has to adopt some of the best practices that are there in the globally in terms of the automation. And if you can do that, I think there is a huge scope for this. So till such time that doesn't happen, we can see these numbers at 11 versus 18 of China, and that number can remain where it is. While the GDP will grow, so is the case with mortgage will grow. But as a percentage, it can remain static over a longer period of time. So there are two things that we need to. So sometimes you may get little tempted to get into some of the housing finance company looking at these numbers, but you need to be very, very watchful of what's happening there. So that's point number one. Now, point number two, I think what I really like, and that's one of the things which we should all be proud about, the GST implementation was little faulty, but it has been corrected so well. Now, if you look at this data, and I was really impressed with this data, which, if you look at, divide between pre-GST era and post-GST era, okay? This should be post-GST, not pre-GST. There's a spelling error here, okay? So this should be post, actually. But if you look at it, the indirect taxes and before GST we had excise duty and so on and so forth. The GST, the indirect taxes as a percent of total GDP was somewhere hovering in the region of 5%. It struggled to cross 5%. But once the GST has come, it's constantly above 5%, and now if you look at it, it's increasing. Of course, this was a little anomaly for the very simple reason because of COVID. But even if you look at from 6.2, that is pre-COVID, it's going to 6.6%. I must tell you, there is a huge scope for this number to go up. Remember, our GDP also expanded, so your denominator also increased. But the numerator increased much faster as compared to the denominator. And due to that, it is at 6.6%. If I have to come in front of you maybe in 2033, that is one decade after, from now on, there is a high probability that these numbers would be very close to 10% in double digit. And that's kind of stuff that's possible. So I think we have not still yet hit the top. There is a huge scope for improvement in terms of compliance and so on and so forth. But another good thing which you must all remember, now we all know that GST collection is also a function of the slab rate. And we have 0, 5, 12, 18 and 28 slab rate. Okay, 0 does not get any revenue, so that doesn't get accounted in this one, am I right? But if you look at the biggest chunk of revenue coming from the 28%, 18%, that's a what we call slab that gets us the highest revenue. But the 12% slab rate contributes only 8%, which is the lowest among all the various rates that are available. And I personally believe is that 12% is making little less sense. Ideally, government should come out with somewhere between, merging 12 and 18 and make it as a 15% kind of a slab, which is only one slab. So 5, 15 and maybe 28 is more of a scene goods or goods which are luxury goods and kind of a stuff that can remain. And there is a lot of need for that to get merged This too. And I do expect restructuring of slab happening in next 3 to 6 months by the GST Council. There is a one possibility, I'm not ruling out that possibility, that it can happen. It can also happen because of political now, there are a lot of elections coming in. First the assembly elections, and then we'll have a general election, and government, a lot of politicians will get busy with the election process. This can happen maybe post-election also. There is general election, I'm saying. But ideally, if you ask me, government should act little fast and try to see how do we basically make sense of 12% GST rate, which is just at 8%. Can we not merge with and come out with maybe 15 or so? Of course, there will be revenue neutral, it has to be for the government. And I think if my memory serves me right, when the GST got launched, it was the 15% was the revenue neutral rate, if my memory serves me right. And if that is so, it's all the more reason that we should do that 15%. There are a couple of things that will happen. Number one is that competitiveness will increase. Number one. Number two, I think the GST slab rate will make it more compliant for the people to follow. If the lower the rate, we have seen higher the compliance coming in from the business community. While the indirect tax has gone up, but let's understand also, it has not come at the cost of direct tax. Why am I saying so? So we are comparing apple to apple. Until July 2023, 5.84 crore. This is for FY 2000. That is July 2022. 5.84 crore total income tax returns were filed. As of July 2023, 6.8 crore income tax returns have been filed. In other words, 16% more returns have been filed. In other words, like if you look at the data of FY 2019 or FY 2000, that COVID period, we already touched that number. In July, but normally, July, people do file income tax return post-July also. Why? Because if you look at it, even though for July 2022, only 5.84 crore returns were filed, for the full year, it was 7.8 crore. So these numbers will go, my sense is above 8 crore, which will be a record income tax return. What is the message I want to tell you, everyone? India has been little laggard in terms of tax to GDP ratio when compared to some of the other parts of the world. And more compliance, more and more people coming under tax net, digital economy, government using more of an artificial intelligence to really look at it, those who are evading tax, they are all going to come, and these numbers are going to keep rising as we talk about. Number one. Number two, as the standard of living goes up, more and more people will come under tax net. This is despite the fact that government increased the income tax slab rate for the customers, for taxpayers, right? And yet the number of people filing income tax returns are on the rise. So I think that's another good thing. So the message is very simple. Indirect taxes are going up, direct taxes are going up. And if government, if the corporate India is doing extremely well, which I come to little later of my presentation, this number of, not only the income tax return file will go up, even the collection on the through income tax will also move up, which is a very happy sign to have it. So I think what I'm trying to convey here as a trend here is that the more and more Indians are becoming tax compliant, number one. Number two, the revenue is increasing. In a way, it would give government a comfort level to spend more money on the infrastructure, on other social needs of this country, to help not only improve the soft infrastructure, as well as the hard infrastructure in this country, which will help government, this will help India to move in a faster lane. So that's what my sense I'm getting from this two trend. Now, as I was saying in the beginning of this webinar, if you look at the income, the market has gone nowhere, to be very frank with you, last 1 month. If you look at the data in last 1 month, the market has a little struggled to grow. But IT as a sector did extremely well. It's up by almost 2.38%, outperforming Nifty Bank as well as Nifty and Sensex. So it has done extremely well. Am I right? And one of the reasons why market seems to be in more, see, if you look at the commentary from the IT players, they are basically more circumspect, in the sense they are more cautious in their outlook. Some have gone on the record saying that we are not going to give hike. If at all we are going to give hike, it would not be immediate but little delayed, and even the quantum of hike will not be so much. So why is that IT companies have moved up? Why the Nifty IT index has gone up? And one of the trend that you can see consistently across all IT companies is the number of people leaving IT companies. That's the voluntary IT attrition is on a decline. Okay, and if you look at it, if you compare it, many of the players have seen lower than what it was there in December 2021. All right, except Wipro, not except Wipro, except TCS, which was 15.3, which is at 17.8. But otherwise, everyone has seen their numbers on a declining, this one, at least on that. And I think the one good thing, what is the trend it clearly suggests is that somewhere in September 2022, that attrition rate seems to have peaked. Or maybe, maybe we can say September 2000. And then slowly, December, it was lower. Then it was lower in March, it is lower. And there's a high probability, as in when this IT companies declare the numbers for September, it would be further lower than what it is there for June. Why am I saying so? It's a very good, happy situation for the IT companies. For the very simple reason, employee cost is the highest, almost 50-55% for most of the IT companies as a percentage of revenue is accounted by the employee cost. And when your main cost comes, eases off, it helps you to expand margin or retain the margin. And that's one of the reasons I believe IT companies have done reasonably well in the last 1 month. Now we all know that, cement is one sector which we have seen a lot of mergers and acquisition. Ambuja Cement and ACC was acquired by Adani. Adani very recently acquired Sanghi. And there are more companies are available, or there would be more mergers and acquisitions that would take place in the years to come. So this is one sector which has seen a lot of mergers and acquisitions. Why is that happening? One of the big reasons is that government of India is going to spend a huge amount on infrastructure. And if Indian economy is going to do well, they will do well. So this is the data that you can see where the production versus GDP, and there is a high correlation of almost 0.87%. The reason I am discussing this data with you for two reasons. Number one reason that we are expecting more mergers and acquisition within the cement space. And due to that, this industry is going to get consolidated. And once you get consolidated, when there is economies of scale, very obviously your cost of production will come down. But the other big reason that I am discussing about is that there is because of mergers and acquisition, the smaller players are up for grab. In the sense they will not be able to take on some of the large players, and we could see some mergers and acquisition happening within the cement space. And if at all, if you wish to really take a tactical call, tactical call I'm talking about, then you should look at some of the mid and small cement companies. Some of the cement companies, EV per ton, that's a more used data for the acquisition. And even if you look at, if my memory shows me that for Sanghi, I think it's working out to be $70-75 per ton kind of stuff, EV per ton. The many companies are available less than 40 and 30. They will not be able to sustain, repeat, they will not be able to sustain their operations. Eventually, they will be able to sell. And when they sell it, they would get the same price that someone else is getting, am I right? And there is a huge gap between the the EV per ton, the price they're quoting right now in the market versus the acquisition. And as in when someone acquires, you are supposed to make an open offer, and that's where retail investors will be able to participate. So I do believe there's a huge scope for merger acquisition, and you need to play little smart. You need to get into some of the cement companies. I'll give you one classical example which I did in my personal portfolio. There's one company which is a very smaller player, was acquired by a very large group. And at that, this company is still listed. It's not get delisted or something. The scrip was available for 5 rupees and 6 rupees. And it was making a lot of sense to acquire because some large player acquiring that company and doing, if my memory serves me that it's quoting at 50-55. I don't look at the company price on a daily basis, so I don't know. But it's quoting it, and this happened in 5-6 years only. So the point I wish to say is that sometimes the trend gives you a good idea about where should you be looking at the opportunity for you. And you need to take your call, which companies the promoters are weak or promoters may not be able to sustain, or they've given indications that they're open for moving out of that business, and that's what's going to happen. So cement, remember, is going to be more domestic play because cement you can't export. So that import threat is not there. And more there will be consolidation happening within the sector where few large players will only be there. I was looking at, today, it's a classical thing. At one point of time in India, there were many players within the aviation. You'll be surprised to know that there are only 2 players now in aviation, practically. One is Indigo, another one is Air India. So if you wish to travel somewhere, the website will show you only 2 options, Air India and this one. And of course, there's SpiceJet, which is there, which is not there like kind of stuff. Go Air is anyway out of the business. So the consolidation happened without people realizing. Something happened in telecom. We have only 3 players now. Once upon a time, we have more than 10 players in the telecom. 3 private players and one then BSNL. MTNL got merged with BSNL and so on and so forth. Something similar can happen with the cement also, where number of players will keep shrinking, and that's going to happen there. And that's where there is a huge possibility. Unlike telecom, there is a huge possibility. Unlike aviation, where businesses shut down, here someone would take it over. Why? Because the manufacturing thing. In aviation, you cannot take over anything, am I right? Because these are all planes on lease actually. There is an Akasa Air, but Akasa Air still need to expand their operations, and so Jet Airways is yet to come and start operations. So competition can increase, but otherwise it's the same. So something similar is going to happen where 4-5 players would account almost 90% of the capacity. That's going to happen, and that's where it come at the cost of mid and small cap. What's a positive trend? I was surprised with the kind of growth that we have seen in our GST collection. In FY 2018, the total GST collection was 7.2 lakh crore. But that's okay, fine. It's 11.8 crore in FY 2019, just before the COVID hit us. In first 4 months, we are at 6.7 lakh crore. And if you look at the data, it's increasing every year, except one FY 2021. Very high probability that India would look at more than 20 lakh crore kind of an GST collection in FY 2024, which is a huge up from 11 crore to or 12 crore to 20 crore kind of a stuff. Which is the point which I was to convey here again is a positive trend, because what it also shows growth in the economy despite the global challenges that we are facing. See, FY 2023 was not an easy year for any economy. Am I right? And yet, we have been able to move from 14.8 crore to 18.1 crore. And despite the smarter growth, we do expect this to go up to 20 crore or so. So I think we are looking at a very kind of a positive trend on GST collection month after month, more on a compliance, and I do expect GST, what we call rationalization of that. Now let's come to the negative trend. And I want to tell you, I wrote one blog, I hope people must have read it also. some of the prices are gone up Y on Y for many of the food items. Like onion is up by 5%, urad dal is at 8%, atta is 8%, rice 11%, tur dal 28%, and the tomato is at 311%. Now, many experts are suggesting that the inflation is going to remain little sticky. And I think we need to all be aware about that. Last webinar I discussed about in the trade analysis that how crude oil prices have surged, am I right? And I think food prices are going up, and this will all get passed on somewhere in the inflation, in a one way or another way. So my sense is that do not expect inflation to come down now from this level. I think inflation is going to remain a little sticky than what everyone believes, not only in India but globally also. And hence, but we don't expect inflation to go back to the level that we saw last year. It will move up, but not as much as that is going to threaten the market sentiment. It can impact the market sentiment temporarily, not on a longer period of time. So it may impact the market sentiment for 1 day or 1 week or 1 month, but not beyond that. Since it's a June numbers, June quarter season is on, it's my duty to tell you. And look at this data. June quarter normally is not so robust as compared to the March quarter. But look at quarter on quarter, 3.3% growth in net profit and 45.8% growth in the Y on Y profit. And that gives a clearly cut indication how good India Inc. has performed, how good they were able to expand the margin. And I think it's a commendable job done by the India Inc. And that's one of the reasons Indian market is at all-time high. Why? Because the results are extremely good. And as and when the number improves, your valuation of the Indian market also improves. Am I right? Because the earnings growth is a function of what kind of valuation Indian market can command. And we have seen a very good trend there. What are the major news? Of course, the 2000 rupee note is almost out of the circulation now. And what is a good thing is that people have actually deposited the money in the system, in the bank. In other words, this money will go in a formal channel, and that will really help to expand this. Had people exchange for other denomination, again it would have gone back to the locker. But that's not happened. Am I right? So that's a very good thing. June PMI, a little dip, but still above 50. That's a good thing. Windfall tax on the crude has gone up very purely because of the crude oil prices have gone up. So I think that's one of the reasons why that has happened. If you look at the Fitch downgrade to USA, the last time it happened in 2011, and again it happened 2023. So in 2011, I was not so much concerned. But in 2023, I am a little concerned about the US market because the number of the debt that US government is carrying on its book has significantly gone up. And that's one area of concern. And crude oil price continues to remain an area of concern. Why? Because Saudi has also announced that they are going to cut till September. Maybe they will further extend also. And that's one cause of concern. FIS has been on a buying spree, but for a change, in this week, they were net sellers to the tune of 2,000 crore. And both Sensex and Nifty are down by 0.7% for the week, but mid and small cap are in the green. In other words, they have continued to outperform despite the poor market sentiment. Again, I repeat, our target for Nifty 50 is 20,100 by December 2023. There could be price correction, there could be time corrections, but that can happen, number one. Number two, what I'm trying to say is that there is no much upside as far as the Nifty 50 is concerned till December. But we have stated in the past, and I again reiterate, that mid and small cap should outperform significantly to the large cap. And that's what we have seen in this week also, where mid and small caps outperform the large cap. And that trend will continue rest of 2023. With this, let's open the floor for question also. So can you flash the question and I'll keep picking up one after one? Amir? So your webinars are good and worth attending, Rajiv is saying, but many times it's not possible to attend due to the clash of time with some other engagement. How can I see the recorded webinar? Sir, we are discussing on internally, and if we can possible, we'll try to put a webinar link available so that you people can attend that. But I'm not promising, but definitely it's a point not only you, Rajiv, sir, you have been suggesting, but we have got that feedback from many other members also. So we are working on that. Maybe by next week, keep the question here. By next week, we will come back to you on that. Sometime back, I had seen an email stating that YouTube videos will not be available after the end of the webinar due to some legal issue. But I'm sure you would like your customers to have maximum benefit by being able to view the webinar later also. I agree with you. If due to some reason they cannot be attend live, then you should be able to find way of make such videos available to your Mojo professional. Could you let me know the access video of the webinar? Okay, sir, Rajiv sir, I've taken your feedback. We'll do whatever best possible to do that. We'll also discuss with the compliance team whether it's possible to have this video link made available for the members. If not, can we put it in such a manner that at least our Mojo professional members can watch it and get the benefit of that? Yeah. Next, please. Anand is asking, is it a good time to book profits? Sir, I've repeated this many times, and I will again repeat for the benefit of not only you, Anandji, but for everyone else also who are attending this webinar. Booking profit should not be a function of market sentiment. Booking profit is a function of script. The reason why you bought that company, if that continues to remain there is no need for you to book profit. Please continue to hold that company. Why? Because there is no change in the story for that company. But the reason why you bought that company and that reason is no longer valid, please move out, whether it's a book profit or book losses. Say I was giving one example of one cement company that I bought. It's up by 8 or 9 times. I have not booked profit. And during that, we have seen COVID time also, market moving up and down. I don't, because the reason why I bought that company continues to remain there. So, booking profit is not a function of course, now you might say, okay, market is hit up and the market goes down, that company will also go down. But will you be able to rebuy that company at the lower level? The answer is no. आप कुछ भी कर लो, नहीं कर ले पाओगे. Because sentiment will come against you. So that's why I say you should look at it. Why am I buying this company? Is the reason continues to be there? Please don't book profit. If the reason is change why you bought and that the reason that the story doesn't no longer holds true, please exit from that company. I understand where you are coming from because market is at all-time high, and you have a fear that if market goes down, my portfolio will also go down. Let me lock in some of the profit. That's the only reason why you are asking me that question. And I personally believe that's not the right strategy to do. I will tell you what I prefer to do. I will do myself. Why? Because I'm convinced of that strategy. And if I'm convinced, it's my duty to tell you also, this is the way. I will get out of a company when the markets are lowest also. And I'll not get out of the company even if the market is at top of the cycle also. Function is because my reason to hold that company is a function of that. It has changed, I'll get out of that company. I'll give you a very classical example. There was one company, okay, let me tell you the name of the company also. It was Infosys. I was been holding for many, many years. And I must have sold almost now 6-7 saal ho gaya hoga, when Mr. Sikka was the MD of that company. And the reason I got out of that company because I did not find comfortable the explanation given by Mr. Sikka about some other certain allegation which was leveled against him. And when he addressed the public at large, I went and attended that in Taj Santa Cruz, and I was not convinced of that. I moved out of that company. That time there was no reason for me to. Market was not at peak at that point of time. Nor the market one. But I got out of that company because I believe to create alpha from this level would be a little difficult for me, and I exited that company. I'll give you an example: Infosys. Another example I'll give you. I got out of HDFC, that's a parent company which is now got merged with HDFC Bank, which I've been holding for many years. Somewhere in 2019 January or so, maybe at the price of 2,200 or something. And the reason I got out of it is because the reason why I bought that company in terms of growth and other things, I did not see that thing happening. And I got out of it. The same logic you need to apply in your, irrespective of market sentiment, what the market is, look at the company specific and take a call on that. Anandji, sorry, I gave a little longer answer, but it was needed so that you people understand what should be your strategy. Yeah. Okay, Sridharji is asking, in my view, GST instead of being deflationary has become inflationary in India because of some crucial in terms like petrol, etc. It's outside the MB of GST. Do you think we should congratulate ourselves each time GST collection goes up, now working above 1.1? Is it price we pay for being less income tax compliant? Okay, so Sridharji, I think you asked two questions. So let me answer both of them one by one. So please keep the questions, or in case if I forget, it will remind me. So, this petrol and diesel part of the GST, this question had come, I think, last year or year before last also when we were working from home. And at that time also I suggested it will not come. No state government is willing to put petrol and diesel as a part of the GST mechanism. Well, that's the only way the state can have a control over revenue, because it's more of a state subject, am I right? Because each state has a different kind of a tax on that. So I don't think it's going to come. It will remain outside the ambit of GST at least till the election 2024. उसके बाद क्या होगा पता नहीं मुझे. But it's going to. I don't think the state government will want to give up that kind of a power, that revenue source easily. So that's what I said. Now your question is about, is it inflationary or not? Higher the GST collection, that means government is collecting more taxes. And if the government is collecting more taxes, the businessmen are passing on that, they are paying and they are collecting from you. And that's the reason why it's becoming inflationary. That's what your assumption is. My sense is that the reason why GST is going up is more because of the compliance related, not because of anything else. Now, if you look at the India's inflation, post-GST coming in, and the pre-GST, you would see that India's inflation has been much, much lower than that pre-GST collection period. Now, if you are saying, Sridharji, that if the higher GST collection is resulting into higher inflation, then that trend should have been visible. But trend is not visible. On the contrary, the inflation has come down. I can't recollect in my memory that India's inflation was lower than the US inflation in 2022. Had that inflation, GST would have been inflationary, our inflation would have been higher, not only higher, but historically US inflation has always been lower than India's inflation. So I don't think, sir, I think it's more of a compliance, more people are becoming more, coming under the tax net. And that's why it has become, so the loopholes have been, I think India is moving away from black economy to the white economy. And that's the reason why GST collection is improving and without resulting into an inflationary pressure. On the contrary, some of the cost would have come down. Why? Because of there is input cost tax available now because of GST, which is making product cheaper as compared to costlier. So I don't think it's inflationary in nature. when it is kind, since USA will go under recession or so, do you think it's a wise to acquire commercial estate right now in US? So I'm not an expert in the US real estate market, but will US go under recession? The answer is no. I think I've stated this almost 1 month back also that if at all there will be a landing, it will be a soft landing. There is no hard landing. Probability of US going into recession looks little remote. On the contrary, US economy is showing a lot of strength as I speak to you. So I don't think it's going to. And is it wise to acquire commercial real estate in US? I was reading some article which says that commercial real estate in the US are in a distressed situation. And my sense is that they may continue to remain in a distressed situation at least for next couple of quarters, if not more. Should you go and buy? If I would be in your place, I would not, because there is a further scope of going down. Now the question that you need to ask: why you want to buy US commercial real estate in US? Is it for a business purpose? Go ahead and buy. Then it's a part of your business cost. But are you thinking from the capital appreciation point of view that buying and then basically holding as a capital assets? My advice would be strictly no. So I don't think Vinitji, it's a time to get into that. In fact, I do expect some of the real estate companies defaulting there, which could result into a further downward pressure on the commercial real estate in the US. I have two questions. Gautamji is asking, is investing in small cap more profitable than mid cap, and how much returns can I expect from the market? Gautamji, my answer to you is that yes, the small caps are more profitable as compared to mid cap if your stock selection is right. If you look at historically also, and if I can take you to the website, can you see my, yeah. Okay, let's look at step by step. So Sensex in last 10 years has given 242% return. Am I right? Let's look at mid cap. It gives 455% return last 10 years, sorry. And the small cap gave 577% return in last 10 years. So mid cap gave higher returns as compared to large cap, and small cap gave you higher returns as compared to the small cap. Small cap gave you higher returns as compared to the mid cap. So if your stock selection is right, small cap has a higher probability of giving you very good returns. That's the point number one. Point number two, the second question to your question was that what kind of returns you can expect from the market. Our sense is that if you want a short-term view, the Sensex and the Nifty would be near about 20,100 by December 2023, end of 2023. So we are near about 600 points additional that we are talking, maybe 3% more gain from the present level. That's it. But mid and small cap will do very well. But if you look at the 5 years time horizon, we do expect Nifty to double from this. So I would not be surprised if I come in front of you in 2027 August, Nifty could be in the region of 40,000. Okay. So and within that, if the Nifty goes to 40,000 or so, there is a higher probability that mid cap would have given you near about 16-17% CAGR returns and 18 to 19% CAGR returns given by the small cap as an index I'm talking about. So if you can afford to take higher risk, you put in those money which you don't need for next 3 to 5 years, please allocate more money to the mid cap and small cap. Small cap first, then the mid cap. Why I'm saying so? Because the probability is very, very high that portfolio will generate alpha for you. Alpha is nothing but returns over and above the market returns. And that's what every investor should aim for. Otherwise, it makes a lot of sense to put money in the ETF and write this. If you're not smart enough and you think that I'm not very well versed with the market, please invest in the small cap ETF. Then allocate some money to the mid cap ETF and some money into large cap. So that basically that way you can balance and keep it for 5 years, you would see your combined portfolio returns would be much better as compared to Nifty or Sensex. So Rakesh ji, my view on paper sector, this question keep coming again and again because we do hold certain paper stocks in our portfolio. They've started doing well. Now paper stocks have started doing very well. And my sense is that risk reward continues to remain in the favor of a reward. And hence, please continue to hold paper stock. If at all, if you're holding this paper stocks in your model portfolio or Infinity portfolio, we will tell you when to exit. Right now, we continue to hold this company in our portfolio. Parmesh ji is asking, can I add or replace stocks in the model portfolio if I have some sector preference? If possible, how to decide the location? Parmesh ji, why do you want to do that? Basically, it's a human emotions coming in, am I right? Because you may like certain company or you may like certain sector, and hence due to that you might take overexposure or underexposure based on your liking or disliking. My advice to you, please do not do that. Please follow our model portfolio in a great discipline without your human emotions. If at all you want to buy a particular sector, please buy in a personal portfolio. Please do not disturb model portfolio. And my request to, if you really want to create wealth, probabilities, if you really want to create wealth, please follow our advice in a very disciplined manner. Remove your stock preference, remove your sector preference, remove your bias, and follow our advice in a very disciplined manner. Randeep is asking future plans to include assessments regarding US stocks recommendation on Mojo. So Randeep ji, we do have our sister concern called InfinHub, where we do analyze US stocks with clear-cut buy and sell, but our IP needs little improvement, to be very frank with you. So, and our sense is that, Randeep ji, is that Indian equity market in dollar terms will give you higher returns. And if that is so, it makes little sense to invest in the US market, unless you have some other compulsions. I have not invested a single rupee on the US market. Reason I have not done it is not that I don't follow US market. I do follow US market very thoroughly. The reason I am not interested because I believe that Indian market, even in dollar terms, will give me much higher returns as compared to US market. And that's the reason I have not taken the exposure. But yes, we do have an infinhub.com. If you want, you can explore that and you can start buying and selling. But as I said, our IP needs more fine tuning to make it much better. Okay, Raju is asking, this question has come time and again to me, and it's a very interesting question. What will be the impact on economy and market? That's what he's asking. In case of unstable government in the next general election, in case of stable geopolitical situation, how can we take opportunity? So, Raju sir, India, unfortunately, before 2014, had a coalition government, year after year. In 1991, India's Sensex was 1,000. And in 2014, if my memory serves me right, we were at 50,000 or so. If I'm right, actually, or maybe let me very quickly look at it. What was it? Indian market has moved up despite the coalition government, big government, so on and so forth. So my sense is very clear cut, sir. Whether it's a stable government, or whether it's a coalition government, whether it's a strong government, I think this market is going to keep moving up purely because of India's growth story and so on and so forth. So my request to all of you, do not take a call, because I distinctly recollect in 2009 and 2004, a lot of fund manager took a call on the market thinking that, okay, sorry, I stand corrected. In 2014, the Sensex was at 27,000. So we moved up by 27x in that period, despite so much challenges that we had in terms of the weak government and so on and so forth. My observation is that whichever government is there, market is completely agnostic to it. Of course, when the government is stable and if the government is doing reforms, probability goes up that market will do well, and vice versa. But because of that, should you make or change your investment decision? My answer is no. What I've learned in last 30 years of my investment career, whichever government comes, if the market fundamental story remains good, I think market will reward you one way or another way. And hence, don't take a call on the market based on which government is going to form, whether it's a coalition government. I think whichever government comes, they are sensible enough to ensure that whatever good work has been done, they will continue to do that. Of course, the pace of reforms can move up or move down. That's a different story. And due to that, the market may move up and move down, or may move up, maybe at the lower pace in case of the reforms are not at the great speed. But otherwise, what are things happening in the India in terms of demographic dividend, in terms of improving standard of living, it makes me very confident that despite whatever the outcome would be of the general election, market over a period of 5 years will be much higher than what we are at this point of time. Someone asked me previously about how do I look at the market, and my prediction that I would not be surprised if Nifty is at 40,000 by August 2027. And I maintain this irrespective of which government comes at the center. Robin sir, I want to invest in the market. My question, should I wait for correction or deploy to invest in Mojo stocks now? Please invest now. Mohit keeps saying in the webinar that best time to invest is when you have the money. Assume that you are right, that market is going to go down, and that's, you don't want to invest. I can tell you with confidence, when actually market goes down, you will not have guts to put even single rupee. So, in theory, people say that you should buy low and sell high. How many times you have been able to do that? Because when buy low होता है, तभी guts नहीं होता है, पैसा होता है लेकिन guts नहीं होता है मार्केट में लेने का. एंड सेल हाई तभी तो फियर होता है कि अगर मैंने बेच दिया और मार्केट और चला गया तो ऊपर. इट्स नेवर. सो प्लीज गो हेड एंड बाय रोबिन सर, मोजो स्टॉक्स. Please start, don't wait for the market to correct. Even if the market correct, it will come up. The correction is not going to be long. It's going to be very, very shallow correction. Yes, there could be time correction, there could be price correction, but both is not going to last for many, many years. If at all they are going to last, they're going to last for maximum 3 to 4 months, not beyond that. And hence, please, you don't come to market for 3 to 4 months. You come to the equity market for a longer period of time. So what we will do, we will take 2 more questions and then we will wind down. Yeah. Malik sir has asked, can dollar hit 85 to 90? What you mean to say is that rupee versus dollar rate going to 85, 90, 100? The answer is no. This is my personal opinion. I suspect and I predict and I believe that rupee will appreciate against the dollar. I again announce bold and loudly and predict very this one with lot of conviction that rupee will appreciate against the dollar. So I would not be surprised if rupee goes below 80 against the dollar. That's what my prediction. So hence, of course, these are all probability, okay? Let me put it this way. Going to 85 probability, I would say maybe 30%. Going to 90 probability, maybe 15%. Going to 100 probability, maybe 1%. So this is what I would look at it. My strong feeling and believe that Rupee, see, if you will be surprised sooner in 2023, Rupee has appreciated against the dollar. It has not depreciated. And I believe Rupee can go below 80 against the dollar in next couple of quarters. 2 to 3 quarters, we could see Rupee below 80. So last question, can we take? Arun sir, yes. Is it a good time to invest in pharma? My answer is yes. I have been kept saying that pharma is a dark horse. We maintain that in beginning of 2023, and we again say pharma looks extremely promising. One of the stock that we selected from pharma last month is a stock of the, not last month, that is in the month of June, was from the pharma, and we continue to believe that pharma as a sector should do extremely well. A lot of generics are going out of the patent in next couple of years. That would open up a lot of opportunity for Indian pharmaceutical company. Number one. Number two, the price of generics have stabilized in the US, and that's also give benefit, and domestic market continues to remain robust for the pharmaceutical company. And valuations of many pharmaceutical companies have corrected significantly in last 5 to 8 years, and that makes a compelling story to get into pharma. So please go ahead and buy. Since I had suggested that this was the last question, thanks a lot everyone taking time out and attending this webinar. Please remember that whatever the stock that we discuss or the sector we discuss is only for your investment, only for your education purpose. Please not, if you decide to buy or sell based on this webinar, please consult your financial advisor before doing that. Market risks are always there. Be cognizant of that, and past performance is no indicator of future returns. With this, thanks a lot everyone taking time out. Have a great weekend. See you next week. Thanks a lot.